Vik, thanks for coming.
Thank you for having me.
I think it's best you introduce yourself, and then I have a set of questions prepared. And
sure.
We can. It's our first Fireside Chat here, so just you realize the change of format. We more have an interview situation. So.
Yeah, well, thank you all for being here. I think this conference is absolutely excellent. Our gracious hosts, Etherisc and Stefan in particular. So my name is Vik Sasi. I'm an associate with AmFam Ventures. We are a $200 million corporate VC fund. Our parent corporation is American Family Insurance, which is a multi-line property and casualty carrier based in Madison. Our ventures fund has bi-coastal offices. The parent corporation, sorry, I should have mentioned, multi-line P&C carrier, 3 main books of business: homeowners, automotive, and small commercial and life. Do about 8 billion premiums annually, sit on about 22 billion assets on the balance sheet. And our venture fund invests across core insurtech, a lot of IoT, in particular connected home and smart home, and finally data and analytics. So happy to be here.
Thank you so much. So we have a VC on stage, and of course my first question is, what is a corporate VC like you doing in that space? So what are you looking for in blockchain insurance, and how do you... So have you seen anything today on stage which triggered your interest, or where you would say it makes sense to invest in that space?
Sure, so I'll back it up. I think our general sort of thesis is that if we look at the internet, which some people say was sort of invented in 1969 with ARPANET sending the first instance of packet switching, I think we would probably say, I guess I'm talking on behalf of our fund, that we're probably in the mid-'80s right now, and in that it's maybe 5 to 10 years before we see core transformative applications like the World Wide Web, email, etc. So I have seen a lot of, so just starting from there from a very high level and then drilling down, there are a bunch of super interesting, fascinating things going on right now, which you're the perfect example of. The other thing that we need to take into account is that when we do an investment, we basically need to exit within 5 to 7 years. So while there's a lot of really interesting exploratory things going on right now, can this sort of exit at $1 billion in 5 years? I don't know if that's true, because it's not just that, private company valuations are its own sort of, that's its own beast. But the other thing that's really interesting is that if you look at when companies exit, it has to be their forward projections have to equal $1 billion. So for anybody I'm sure there are several who are in finance, and if you look at discounted cash flow or something, when you discount those forward cash flows, that has to equal $1 billion at present value. So that means that it's not just that can this company accrue that much revenue and profit, amass that wealth in the next 5 years, can they also guarantee that it ends up being worth that much more in the future? So for now, we are treading very lightly, and that's from a pure finance perspective. The other side strategically is that, we're number 315 in the Fortune 500. We are as ancient as they come. I mean, insurance, I'm speaking on behalf of, largely in the US, is that we have a lot of core processes that clearly need to be streamlined, that blockchain and that a lot of crypto applications that are here right now can certainly help with, but it's just, we're playing the long game. So for now, I am the eyes and ears on the bleeding edge, and certainly taking everything back that I learned to the mothership, but we're treading lightly for now.
I mean, it shows that you are on the innovative edge just by being here. So thank you for coming. What I would be interested in, a lot of insurtech companies, blockchain insurance companies are trying to raise funds through an ICO, token sale. So what is your perspective on this? Can you, as a corporate venture capital firm, can you invest in token sales? Or how do you see this?
Yeah, so this is something I've been coming to the deal table probably every other week with the latest and greatest ICO, and it gets shot down literally immediately, mostly because in our investment policy, we're only mandated to take minority equity stakes, which are clearly impossible in the majority of cases, I guess, for the ones that classify themselves as securities and pass the Howey test, etc. There is a way around that, and then you can form a special purpose vehicle and look to form a syndicate. But for now, it's largely, it's really, really hard. And that's on behalf of the corporate VC side. From an institutional side, they can, and you'll certainly see a lot of the tier ones are investing in sort of crypto hedge funds like Metastable and Polychain, and then even getting access to pre-sales. I think Orchid Labs recently just had a bunch of Andreessen Founders Fund, et cetera. The ICO, everybody in this audience is probably a lot more in tune with what's going on and reads all the Medium articles and everything. I mean, we look at the ICO or the TGE as sort of a fascinating development in the evolution of company formation, but there's a lot left to see. There's a lot left that remains to be seen, I should say. And by that I mean is that a lot of people look at this as like, oh, this is totally disrupting or displacing venture capital. We are not by any means shaking in our shoes. And the reason I say that is that we're glad this is happening. Like we look at it as democratizing venture capital, not necessarily disrupting it. And I think it's the end of the SEC's accredited investor. It opens up a lot of opportunities to Main Street or to the retail investor that was normally only relegated to sort of the tier one VC firms and et cetera. So that's great, and I think it may actually help alleviate, albeit a very tiny amount, economic inequality and that. That said, is that for a lot of traditional companies that are venture backed, there are lots of problems that arise every other week, and so. When their head of business development or engineering quits, or their largest customer doesn't renew their contract, drastically hitting their ARR when they're out raising their Series A, you can't go to your majority token holders. Like, you have to go to your board, you have to go to your investors who were there with you, who were backing you from day one, and ask them for their advice, or have them hit up their Rolodex. If anything, for corporates, like, our value add is in that we know insurance, so we have a team, we have an army of sort of people that can add value, et cetera. So that's sort of how we look at ICOs right now, and who knows what will happen in the future.
Okay, thank you. I would like to open this up to the audience. Any insurtech companies have questions to an insurance VC? Now is your chance. If not, I can. So if we have one, very good.
Hello. It could be a bit controversial, but I've seen I'm looking at insurance space and ICO, and then so far there are two companies who tried. One failed, and another one is called InsurX. They got 6 million or something. Have you seen their ICO, and what's your view on them?
Yeah, InsurX. I think now they're like IX Ledger, and the other one, I think the other one you're referring to is InChain. Yeah, no, we haven't seen, and IX Ledger is actually, I think from what I remember is they're not even consumer facing, they're just trying to sort of like displace the broker and just have insurers and reinsurers. So up until this point, I haven't. I mean, it's obviously a massive, it's a lot of white space or blue ocean, whatever dumb buzzword, I guess VCs use. That said, is that there's a reason I think insurance is like just incredibly complex, and what we're seeing in sort of, so I look at obviously a ton of core insurtech is that you see people just jumping into the space thinking like, oh, okay, bloated value chain and et cetera, we're just going to go do this, and like they realize either without having had insurance expertise in their sort of in their background, or not ever having started a company, that it's really, really hard, especially to sort of sell into carriers, if they're sort of like solutions providers or vendors. And the other thing is that, I only know the American context, but it is just incredibly, the legal and regulatory hurdles that are there are, nearly unparalleled, I would say, in that, like, you can't charge rates that are too low, nor can you charge them too high. You have to sort of be in this band. The other thing is that for anybody, that knows about the insurance space is that it's, or the legal space is that, these shell carriers, these shell companies are essentially like the new taxi medallion. So you can't just go start a new insurance company. If you do, you have to buy a charter, get multi-state regulatory processes, because insurance is regulated at the state level, not nationally. So you essentially have to have 50 different teams. And it's just, and then you have to do a dollar for dollar exchange for capital reserves. I mean, it's a total, it's insane. So like the structural challenges that are there for insurtechs to try to, I've totally misdirected answering your question, but I apologize. But I think that's why we've only seen 2 ICOs and 1 failed for insurance.
Okay, does this answer your question? Sort of, no?
Sorry.
Do we have any more questions from the audience? Otherwise, I would like to ask you, as an aspiring blockchain insurtech startup, what is your checklist? What are you looking for into insurtechs? What do you want to see from a startup entering that space of blockchain insurance?
So I
like a checklist or the top 3 factors that you're looking at.
I'd probably compare, like, sort of look at ICOs. I mean, these are just these are pre-seed rounds. So, our checklist is just team, product, and market. If we have 2, we can usually sort of, find it or cultivate and nurture the 3rd. But that's on its own. Yeah, that is sort of what we look at with the pre-seed, or like with the ICO stage. Yeah, I think it's really, really early for us. I mean, in the whole space in general, and so that's why it makes it really tough to sort of to look at. I guess the other thing that I want to say is that obviously we're all here because we're down the rabbit hole of like our society is moving towards a decentralized movement. There are a lot of conferences like these where people are saying the same thing about AI and about quantum computing, and so how it's like VCs, we're looking at, what's a company that can offer a 10x improvement or some kind of transformative business model or marketplace. It's a lot easier for us, for sort of the uninitiated, and I assure you, I am one of the least knowledgeable people here about a lot of things that's going on. I'm obviously one of the 50% that is not a developer. But it's a lot easier for us to sort of see the downstream effects of quantum computing or AI in compute-intensive or data-reliant industries. Whereas for blockchain, it's like, okay, or decentralization in general, it's like, okay, well, this industry seems like it's functioning quite well. Is this going to be a 10x improvement if we decentralize it? So it's hard for us to envision, speaking on behalf of general VCs, but certainly this is the latest and greatest asset class, so all eyes are on the companies and you guys, especially in the room.
Okay, thank you so much. Awesome to meet your time. We have one more burning question. Yes, great.
What are the average of the ICOs in your venture capital firm? With the average firm, I mean, in terms of dollars?
Sorry, what did you ask?
The average investment?
That we make, yeah. So our ideal bite size is anywhere from $1 to $5 million, aiming for a 5% ownership stake, and we're seed, Series A and Series B, and a $200 million fund.
Thank you so much. That was the VC perspective. And now we go back into, so thanks a lot, Vik. Again, a nice applause.